everybody. Sorry for the late stream. Be so honest, I was literally locked in. I'm building a website again, and the deadline for it is this Friday. So I don't have a lot of time, and there's a lot of work. So even all night after the stream, I'm gonna go back to work, and I'll be so honest. I got carried away, forgot about the time, and I just realized, wait, I haven't streamed today. So I'm going to do a quick review of what I saw today, what I did, and as you can tell by the title, it's called Reaping the Rewards of Preparation. We talked about observation and how that translates into preparation, and we talked about how to turn preparation into planning and then action. We were not able to execute the idea, but we can talk about what we expected to see and what we ended up seeing and why we set these rules. So first of all, we had the bearish sentiment. The bearish sentiment is based on market structure and I believe experience. So what does that mean? That means that market structure here, we are quite bullish in the short term. And what happens next? We have this big displacement candle taking out this swing low, failing to create this higher high over here. In fact, we create a lower high, sorry, that's confirmed by creating a lower low. And then of course we displace again, right? So we have this bearish sentiment, especially in recent times, because we have displacement back in it. There isn't liquidity in this area, but there is in this example, but there is at least strong market structure breaks and shifts. So that's why we have a bearish sentiment. Now, whenever you have a bearish market, you'll have bullish moments, consolidation moments before you continue. You won't just have one straight black candle all the way down. You have, as you can see here, when we're bullish, we had a period of consolidation, moved up, pulled back, pushed up, consolidation, and then we had a big move down, consolidation, big move down. So that tends to be the shape of price. Now, this is DXY. So it is an umbrella for all pairs relating to the dollar, but it gives a good sentiment of where you can carry your bias into specific pairs. So what we was looking for was following the market sweep of the weekly low, which is marked here, and this equal lows on the weekly time frame, which is where this blue bar is seen as support for retail. So that is liquidity for us. So when we had the sweep of that, I then believed that price could go up to take this weekly high because it's also equal highs, and then I was going to expect for price to sweep it into the fair value gap and then come back down. However, to enter a buy, there was a lot of things I was requiring first. First of all, I wanted to see price break this area here. It created equal highs, but I was expecting it to break it, and how it broke it was important. I was expecting to have a displacement. If it didn't do those things, I was never going to enter the buy because it has a bearish sentiment. Now, in a bearish sentiment, there's going to be pullbacks, there's going to be opportunities to buy, which is why I'm very, very, very strict and careful, cautious when I'm trading against a bearish underlying tone in the market, which is not something I do normally anyway, but sometimes I do look for the opportunity. And I was talking about precision in terms of funding the idea of trading against the bearish sentiment because it's some bullish logic, right? But this is what happens when you have a bearish sentiment, is that at any moment in time, you can get some big moves like this. So we defined beforehand what we was looking for. We didn't see it and it protected us. Another thing is as well is that we still could have made money. Why? Because when we had this sweep, this is NZD USD, we had the sweep of these equal highs again, support, rather resistance. Retail sees this as resistance, which means we see that as liquidity. When price swept it, when this order block came down, it didn't really have that oomph in terms of how it took out this swing low. It didn't have that displacement we was looking for, and it eventually had it over here. Now, there was multiple times we can get in, but our target would have been here if we had that DXY move that we described earlier, the breaking of the high and then the displacement in doing so. Here though, what did we see is that we saw this area from this high to this low. We didn't really like the areas here. There wasn't any strong displacement. Then we had from here to here, we didn't get that pullback into this order block here. We didn't even get into this area here, which was actually what I was looking for to potentially get into price, and I would have been targeting old lows. So for example, I could have entered in here and targeted previous lows, which is a 1 to 4.48, right? Another example would have been a little bit safer, which would have been from here to here, which is this order block here. If price came up to it, low hanging fruit, this is the high of it, add a couple of pips, same area, targeting this low, that would be 1 to 2. And then if you had gotten in here, which I wouldn't have gotten in, I don't think, with this high and this low, you could have got in, and again, I would have got the at least halfway mark. So it would have gone in here above the order block, targeting equal lows 1 to 2.5. So there's many ways you could have got in here if you're targeting previous lows, that is, and you would have been safe in terms of actually hitting your target. Now, I wasn't convinced. I knew that price could slowly get to my target. I knew price could reverse at any moment in time. But when you have a bearish underlying tone, I'm very careful. So I avoided the markets altogether. That was a decision I made, even though I was looking for what I was looking for, but it didn't come up to the place I was looking for it to come up to, nor was the XY showing me what I was looking for. Then I also looked at other pairs, and it was also showing signs of bullishness, so I didn't get in. So now we move on to, we just described how we reap the benefits of preparation. With our preparation, we knew that what was looking for, it didn't happen, so it protected us because our rules and our rule sets are very specific. When we don't see them, it's another topic I'll talk about later. It's called defending. It's called saving money. One of the things in trading that is not talked about enough or stressed enough, in my opinion, is the importance of retaining funds, not losing money to losing trades, and how to keep your money safe in trading. And it's very difficult because there's an urge to always want to trade. So how do you manage that? How do you manage yourself? How do you manage your emotions? And ultimately, how do you manage your account? All of those things, I believe, are mental. At the very minimum, that's 80% mental. And once you figure that out, once you solve that, you are in a better place. Now, in terms of pivoting is difficult because when you have a idea or an idea, you tend to want it to play out. And when you see it not play out, it's essentially what it is that you're meant to have a bias, but you're meant to have rules to your bias. Now, if you have a bias for the week, or you've prepped, you spend hours trading or planning, marking up the charts, and then you have a plan, you want price to do something, and it just absolutely obliterates it, doesn't regard all your hours of work, it's very difficult to now switch sides when it's not emotional, because it's either you switch sides out of because of fear of missing out, or you don't switch sides because of your original bias. And both is bad because both leaves you prone to making mistakes. So then you have to know, how do you pivot? Well, you just redo what you did before. You have a very systematic way of analyzing the market. You do that again, and then you interpret the observations. So you set your observation skills and you reset. Remember, we talked about observation. Observation is something that is purely looking. There's nothing to do with it in terms of interpretation. You don't add anything external. It's just about marking the charts up. So that's exactly what we're going to do. So this is how you pivot right here. I'm going to start with DXY though. I will try my best to commentate over what I'm doing. So get rid of all these arrows. Anything that's not taken or has been taken is not relevant. So one thing we can get rid of, starting on the daily time frame, is we can get rid of this, this, this. Keep this, keep that. Get rid of this. I know it's there. Get rid of this. Right. So remember, we have this bearish undertone in the market. We also had this area of consolidation. Let me just mark this real quick. This area of consolidation. We've also come up to this low right here, which is a swing low on the weekly time frame. Make that green. We haven't exactly taken it out yet, but we haven't also taken or made an equal low, which just closes in a minute. So the markets are, well, to be fair, they've actually been open. It's just the daily time frame for DX London session. It closes at midnight. Or midnight, sorry. New day for the candlestick. So we have displacement, consolidation, big candlestick. Not exactly displacement just yet. What would I expect here? Well, at some point we're gonna have a retracement. We was expecting a retracement here. It didn't happen. That's fine, but it's still resting in buy side liquidity. We've taken out this low. We've taken out this low. We've taken out all these areas of sell side liquidity. We should be expecting prices to now push back up. This is what we was looking for earlier, which is interesting enough, but it also can be applied to now, especially when we didn't regard certain areas before. The reason why we'll be looking for pullbacks is because we want to posture ourselves for sales, but I'm not going to get into that yet because that's interpretation mixed with observation. I want to get you guys out of the habit of doing that. So observing wise, we have this range to this range. This is in a discount, of course, and if we mark up this whole range, we are also in a discount. Give me a second. I do have to go, but I will do my best to finish this up and then I'll continue. We'll do another stream tomorrow, of course. Right, so equal lows right here. We have fair value gaps here. Someone's at my door. Hold on. Okay, so this is an area where price could go up. Like I said, oh, so have we finished the observation? Let me just double check if there's anything else I want to draw. Yeah, I think I finished with observation. We can maybe mark yesterday's high as liquidity, which should make a mark out with a green line. I'm gonna get rid of the weekly high just because the daily high is right here first. Okay, so now that we've done the observation, we can now look at interpretation. So we are bearish. We have the same bearish underlying tone that hasn't changed, that wouldn't change until we have broken structure on the upside. So we're looking for sells, right? And whenever there's a sell opportunity, you want to be selling from prime areas, which is for us where price is in the premium, which is above the halfway point, 0.5, and of course targeting, well, not of course, but are targeting this optimal trade entry. 705 is the sweet spot, but we are open from the range 79 to 62. So what does that mean? That means that we need to wait for price to push up, right, before we then enter sells. But for price to push up, how does it push up? It moves from internal liquidity to external liquidity, vice versa. So to get to external liquidity, you got to go through internal liquidity. So we're currently at external. We have equal lows right here. I believe that price has good reason to retrace from this area for the following reasons. One, we have liquidity that we're taking. We're also in this area of fair value gap. So to push down deep into the fair value gap, take out that low, and then pull back, I think is plausible. And what we're pulling back into, we're pulling back into this halfway point, which is this whole order block right here. Just gonna make it darker so that area is very much highlighted. So I also might have to change the color. I'm not really feeling black as the color. Maybe orange. I don't know. Anyway, we use grays for now. Cool. So from the weekly high to this current low, pulling back into the halfway point, we have the order block which you've drawn here, and that would then be a prime location to enter sell, with a stop loss being here. And of course you can have a target this equal low depending on how much. If it doesn't sweep, if it does sweep, then you can potentially even target the next low, which is all the way down here. So that is the idea for DXY. So we were very careful to separate the observation from the interpretation. It's very easy to mix them up, but only interpret when you finished observing. It helps you because when it's time for interpretation, you don't want any biases involved. So that is my next plan for DXY. And my target is been set. You always want a target. I said this is my first target. If we don't sweep, then this area off. If we don't sweep this and pull up to this area, then I'm selling to this area here. I'm marking this place. I expect price to, however, pull back deeper into the fair value gap, sweep a little bit more, pull back again, have a retracement to this order block here, and then of course you can sell off from it. On the daily time frame, this is the order block, but obviously the order block isn't complete yet, so I would personally be careful. But either which way, stop loss will be above that area there. You can just set your low hanger fruit to this bit here, but either way, I'm happy with this. So that's our idea. And then of course, if we then sweep this, it can even come out down deeper. We then target the area here, which is this swing low on the higher time frames. So that's for NZD USD. So that's with DXY, which means that on other pairs we're going to be bullish. So let's see how that would look. So for the pair NZD USD, we're going to do the same thing, which is observation, and then we're going to interpret afterwards. So daily time frame, this is liquidity being taken. This is now irrelevant. Let's get rid of the black lines. Boom, 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 boom. Okay, some consolidation here. Okay. So this one's pretty easy to read in hindsight. We are bullish. We pull back into this fair value gap and swept all this liquidity, created a swing low, pushed up, but we also had a displacement here. Took out this. So we took out sell side, took out buy side. So in this consolidation area, took out the lows, took out the highs, came back down into this range, but into this fair value gap, which I'm sure would have been, of course, OTE. Came up to 6-2 level and then expanded, took out this liquidity, which is in this 4-hour order block, which you can actually delete. And there is this high over here, and then of course the high over here, which is equal highs, which is resting liquidity. So there is nice targets. So we are now looking for buys, but we want obviously opportunities to do so. So what would we then require? First of all, we have this area here, which is OTE from the current high and the current swing low. And of course, if price was to retrace from here, it just took out this liquidity, it could come down, then it'll be here. But it's plausible the price just goes up, sweeps this first, then comes back down into this fair value gap, which is where we would like to buy from. So make that green, and this will be the kind of vibe we're looking for. So something like this, then targeting that, and then of course doing the same for these ones. There's nothing much right here. I want to see price kind of do something. It's currently just chilling in the middle of nowhere. I think NZD is kind of the vibe we're going for though, which is a pullback into OTE and then a buy from there. We'll just zoom in a little bit. This is the daily time frame. So when we touch the area, we will then zoom in, look for the transition. At what time frame, that will depend on liquidity pools, etc. But that's how you pivot. So the pivoting is key because it's when plan doesn't go to plan, what happens? Funny enough, most businesses, everyone has a business plan. Well, good businesses have a business plan, but most businesses don't actually follow that business plan. Why? Not because they don't want to, they try to, but a lot of the times with business plans, they don't go to plan. So what do? Do you just give up? No, of course not. You pivot, you learn, you move, you keep moving, keep doing that. Traders, the same thing. When things don't go to plan, when you're looking for something, it doesn't happen. Well, there's always another opportunity. There's opportunities every second. So you just got to plan and posture yourself for the next wave of your type of opportunity, and that's what we're gonna do. We are training a little bit slower this week as we've studied less, so and we're looking for very precise entries and whatnot. So I still haven't taken a trade, but we're posturing ourselves. And whenever I don't take a trade and I stop myself, especially from losing, I tend myself to reward myself for something, just so I can keep doing that. I train myself to be good at learning how to not take a trade when the market conditions aren't favorable for me and my strategy. And you should also do that as well. It doesn't have to be financial. I personally put money in my trading account for my personal account, my personal bank account. Why? Because I just see it as, you know what, you did well, you can be trusted with more money, more capital, kind of a thing. Or if somebody else, you could do a hobby. Maybe you play games for an hour a day, change it to an hour and a half or 2 hours because you deserve it. Or maybe you like going shopping, buy something. Do something where don't go and spend all your money on the shopping, but do something, just treat yourself basically. And it helps reinforce the idea of not trading. It's what's helped me the most. So that's our budget for this week. We're just gonna wait for price to come back down. If it doesn't, it doesn't. But you can see the shape and the price action. Price action is so much harder to read live than it is looking back, because I saw this, but I wasn't able to capitalize on it or convert the seeing into reality, because in hindsight I did look for some sells even lower. So yeah, as like for me, this push up looked like a liquidity sweep, which it was, but it was a liquidity sweep to come back down into this fair value, which I didn't see. So I need to be quite open to interpretation. It will increase my ability in interpretation. Nevertheless, that's it for today. We will be streaming again another time tomorrow. So love you guys. I will be seeing you later, and I hope you guys had learned something new, and I'll see you guys tomorrow. Peace.